Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 24th of June. So the markets are higher across the board thanks to the collapse in oil prices after Israel and Iran agreed to a ceasefire, which was brokered by the US. Now, whether or not the two sides will abide by the ceasefire remains to be seen, but for now, oil prices have gone sharply lower following yesterday's reversal. However, at the time of recording, oil prices are testing this key area of support, which was previously resistance. It's also the breakout area where prices rallied from well before the conflict started in the Middle East. So the risk premium attached to the Iran-Israel war has now been completely wiped out, which means that the focus will now return back to the fundamentals. And if oil prices were on the ascendancy before the conflict started, why can't they now bounce back here, which is something that may well happen, but we'll cross that bridge when we get there. For now, oil prices are down on the day. So the area I mentioned comes in between 63.60 to 65, the psychologically important level. These levels were previously also major support and resistance. As I zoom out, you can see that on the historical chart. The low from the previous day comes in at 66.99, call that $67 handle, which is now the first level of resistance or potential resistance to watch on the upside. Above it, we have the 200-day moving average coming in at around 68.50-ish. Then there's the psychologically important $70 level to keep an eye on. Now, the collapse in oil prices are helping to keep the pressure on the US dollar, which has been pressured further by Powell's testimony, where he suggested that rate cuts could be on the cards later this year. The markets are pricing in a rate cut for September, but it could happen sooner, given that we've heard a few dovish comments from other Fed officials. But it all now depends on economic data. If we see weakness in US data, then that could put further pressure on the greenback. For now, the euro dollar is supported as it tests the previous 2025 high hit a couple of weeks ago at 116.30-ish. If it can close above that area, the next upside target is at around 117, which is the next round handle, where we also have the 127.2% Fibonacci extension of the last major downswing that started at the end of April. Above that, 118 and then 119 are the next additional upside targets. On the downside, the first level of resistance, or support I should say, comes in at around 115.73, marking the high from April, which has now been reclaimed. This is where we also closed yesterday, where the euro dollar created this bullish looking hammer candle when it found good support from the 21-day exponential moving average. Below this level, the 115 level is now key support. And then the line in the sand is the 114.50 level for me, where the euro dollar has created a low this week as well as last week. So that level remains key. For as long as we hold this area of support, the path of least resistance remains to the upside for the single currency. Now, among other major currency pairs to keep an eye on, the Aussie dollar is looking quite interesting because previously it was consolidating for a long time before selling off on the back of the conflict in the Middle East. It has now bounced back, finding good support from 63.80-ish, where previously it had found resistance. And it couldn't close below the 200-day moving average, which it has now reclaimed, printing this nice looking hammer candle on the daily time frame. So we have seen some upside follow through so far today. And for as long as we now hold above the head of that hammer candle, which comes in at around 64.63, the path of least resistance on this currency pair will remain to the upside. So that level is now going to be the most important support level insofar as the short term is concerned to keep an eye on. Below that, we have that black line here at 63.88-ish. And if we were to go back below that, then all bullish bets will be off in the short term outlook. But for now, the path of least resistance is to the upside by the looks of things. And we could be heading towards 66, possibly 67 handle next. For more market updates and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.